We're actually now streaming live via Facebook, so we're ready to go. So welcome everybody who's tuned in to today's special broadcast. I'm here with Julian Fedini from PRPTY360. We're going to be talking about a topic which we've described as where to buy to recover your deposit in 2 years. And essentially what we mean by that is where to buy in areas where you're going to get good long-term growth, certainly, but in particular good growth in the first 2 or 3 years of ownership, such that you will recover what you've spent on your deposit to get into that property. We're going to start by talking about one or two recent examples where that has happened, and then Julian and I are going to speak about some of perhaps the future hotspots, the ones that we're identifying in both our businesses as the ones where we think you as investors might be focusing your attention as buyers seeking that kind of growth, the sort of growth where you can recover your deposit within 2 years. But firstly, I'd like to introduce Julian Fedini from PRPTY360. And Julian, perhaps you could tell us a little bit about yourself and your business and what you can do to assist property investors.
Thanks, Terry. Hi to everybody out there. Yeah, my name is Julian Fedini. I've been in the property business for 20 years now. Our business helps clients with advice around property investment and making sure that people get the property investment and the acquisitions correct for their portfolio. We're investors ourselves, and 90% of the time we're investing in the same areas that we're recommending for our clients.
Okay, so just to kick off the general theme, Julian, I think it's fair to say that the coverage of real estate in media is very generalised. They talk about Australia as a single market, and there's an overwhelming focus on what's happening in the two biggest cities, Sydney and Melbourne, to the exclusion of all other places. And that means that we're really not hearing about some of the growth markets that exist around Australia and other places. We've been hearing a lot about what's happened in Sydney and Melbourne, the downturn and now the recovery. But while Sydney and Melbourne have been perhaps going to reverse with prices correcting, falling, there's been a lack of recognition that in other parts of Australia, including in regional Australia, that there have been a lot of really strong growth markets. I'm sure you've been finding that yourself with what you do, Julian.
Absolutely, Terry, 100%. If you're focused purely on investment fundamentals and research, and obviously that's what we rely on you for, Terry. If you focus on that, the money being made in the market over the last few years hasn't been in the capital cities. It's definitely been in the regional cities. I think one thing needs to be made clear to people is that regional cities aren't necessarily two-horse towns or mining areas and things like that. These regional cities that have been producing consistent and really strong growth have a very strong story about the infrastructure that's changed in the areas, and the dollar value of that infrastructure shows that the area will be changing basically forever. What you cannot spend billions of dollars in infrastructure and have the city remain the same. And so if we've been, part of our strategy has been tracking that infrastructure spend, and that's been paying big dividends for ourselves and our clients.
We've certainly been finding the same thing with what we do at Hotspotting, Julian. We've seen that while Sydney's been going down, there's been many locations in regional New South Wales that have been rising strongly. Similarly, in Victoria, as Melbourne has been subsiding, many of the key regional cities and towns of regional Victoria have had strong growth markets. Many of them have grown double digits in the last 1 to 2 years. And I think we're also seeing growth markets also emerging now in regional Queensland. I'm going to talk about one of those a little bit later in the broadcast, but I thought Julian and I would begin by having a discussion about a market, a regional market that demonstrates the kind of things we want to talk about today, a regional market that's shown extremely strong growth in, say, the last 3 years. And that's the City of Greater Geelong. Now, I know that this is a market that you've been involved in recently, Julian, with your business, and you know that market pretty well. So perhaps you could give us your thoughts on the City of Greater Geelong and what it's done and why it's been a growth market.
Yeah, Geelong has so many strong investment fundamentals at play. So we have a progressive Victorian government down there that has made Geelong and some of the other regional cities close to Melbourne part of their strategy to grow or to have the population growth that they're experiencing. We've seen government offices change from capital cities out to these regional centres, in particular Geelong. Significant amount of people have moved from Melbourne to Geelong for employment. When it comes to other investment infrastructure spending like medical, education and things like that, Geelong really is one of the places in Australia that has had a staggering amount of infrastructure being spent there, and there's still a staggering amount left. So what we found the key to our success in those areas was we were looking for unique pockets of residential homes where the demand is specifically more driven by owner-occupiers than it has been for investors. And by implementing that strategy, staying close to the surf beaches and around the Bellarine Peninsula, our clients have done extremely well when it comes to capital growth.
Yeah, I think some of the points that you just mentioned are very important, things that investors generally should look for. You referred to the relocation of government departments from perhaps Melbourne, central Melbourne, to Geelong, and we've also seen the NDIS, the National Disability Insurance Scheme, set up its national headquarters in Geelong. And what we've found there is that other businesses that are relevant to that particular service, they want to be close to that headquarters. So it's actually brought an influx of new businesses into the central Geelong wanting to set up there. And so the office market has improved, jobs have been created, and of course that all has a major impact on the broader property market for the city of Greater Geelong.
Yeah, look, the thing that we really like about Geelong is you have to be careful with property markets that show signs of what I would call a sugar hit. You may get a boost in the short term, however, there's nothing to carry that growth over the long term. When you consider everything that you just mentioned about the government spending and the relocation of jobs, etc., that provided us and our clients an early equity uplift, but we believe that the continuation of infrastructure spending in that area will carry those property markets along consistently. And generally, that's what we're looking for. We're looking for an early uplift and evidence to show that we'll get continued capital growth from the purchase date.
So it's very much about, I guess, two different types of capital growth. You want to be in areas that are going to be good for the long term, because real estate investment essentially is a long-term play, but you also want to be a market. You want to be buying into a market at a point in the cycle where it's going to get that uplift in the first 1, 2, 3 years to create equity, which will assist investors to be able to actually grow their portfolios using the equity created.
Yeah, absolutely. Generally speaking, one investment property is not going to change your life dramatically. So it's important to get the first property right and then leverage off that property for future purchases. In doing that, you need to be extremely thorough about the locations that you pick to make sure that you are being able to have that client purchase again in the time frame that we just discussed.
Okay. Now, I've got a copy of a Geelong report in front of me. I know you've got a copy there as well, Julian, and I'm just looking at some of the statistical data that's been produced by that market recently, and it's a great illustration of what can be achieved if you choose your locations correctly, if you buy in locations that have a strong, diverse, growing economy, growing population, tick all the boxes, infrastructure spending, as you've mentioned a number of times, Julian, and that translates into strong demand in real estate. So I think the first thing that stands out about the chart of Suburbs in Geelong is just the size of the turnover. It's common throughout the city of Greater Geelong to have suburbs where there's 200, 250, 300, 350 sales in a single year. So very popular suburbs, lots of home buyers and investors buying in there. And the second thing that stands out for me is that the long-term growth rates are particularly strong. Many of the suburbs have 7, 8, 9% per year. That's the growth average over 10 years. So if your prices, you're owning real estate in a market where prices are growing at 7 or 8% or 9% per year over 10 years, you're going to be doing very well as a property investor.
Yeah, absolutely. So if we're referring to that report, assuming, and not a lot of investors use a 20% deposit, but assuming investors were using a 20% deposit, if investors refer to your report for Geelong, I'm looking at a suburb, for example. We've got purely on the data here. Whittington, for example, it's 20% growth in 1 year. The statistical 10-year growth average is 7%. So if you buy any property and over 10 years you can average 7%, you're going to be doing very well. So yeah, it just highlights the importance of having a thorough and detailed research partner like yourself to make sure that we get these figures right for our clients.
Yeah, and just to focus on a couple of suburbs in terms of the 1 year, 3 year, 5 year and 10 year averages, because it very much illustrates the points that you're making about firstly the long-term growth rate, but also that short-term growth rate. A couple of the more affordable suburbs in Geelong are Norlane and Corio, perhaps in the sort of northern part of the city of Greater Geelong, closer to central Melbourne. They both had exceptional growth in the last 1 year, 3 year and 5 year, but still very affordable with median prices in the mid 300,000s. Norlane, for example, in the past year it's grown 15%, but over the past 3 years its median prices increased 62% and over 5 years 72%. So if you're buying a location and 3 years later property values are 60% higher than when you bought 3 years ago, you're going to be a very, very happy investor, and you will have created a substantial amount of equity which can help you to make the next property play. And that's pretty much what you're looking for your investor clients, I think, Julian.
Yeah, exactly. What's super important is to understand the data. So, for example, investors really need to take note to the median house price within the area that they're investing in. You never want to be too far away, either on the lower side or the higher side of the median house price, because that's exactly how the data is calculated. So then not only do you need to understand that figure, you also need to understand what type of property is considered a median property for that area. So we do a lot of on-the-ground research by travelling to these areas, meeting with the most successful and dominant agents in the area, both sales agents as well as property managers, to make sure that we really get a good understanding of the type of property that's going to fit in that median house price, to make sure that our clients get that growth, that double-digit growth.
Okay, so Geelong is very much a great example of the sorts of locations that investors should be trying to target. Affordable entry prices, good rental yields, good prospects for long-term growth, and you're buying at the right time of the cycle. For example, if you'd bought in Geelong, say 2 years ago, you'll be getting that early uplift and creating equity very quickly. And of course, it's a key regional city in Victoria, and it emphasises the point, or one illustration of the point that we're making, that many of the best opportunities of the last few years, and certainly currently, are to be found in regional Australia. It seems to me, Julian, that your screen may have frozen. I'm not seeing you at the moment. You seem to have frozen. What are you seeing at your end?
I'm looking at some frozen pictures here of both you and I, Terry.
Yeah. So it's operating normally at our end. We're in southeast Queensland. Julian's in Sydney. So I'm just not sure what you can do. Katie,
yeah, I'm just working on some stuff now, Terry.
Yeah.
See if we can get that back up.
So some of the people who are actually watching are saying that they've got no issues, it's streaming okay to Facebook, etc. So maybe it's something we just need to ignore and just continue on, Julian. We've talked about the City of Greater Geelong as a great example of what you can achieve if you buy in the right locations. And now I'm going to turn our attention to discussing some of the markets out there in regional Australia where we think that there's going to be similar kinds of growth that's similar to what's been achieved in the City of Greater Geelong over the past 2 to 3 years. And the first one we wanted to focus on is the Sunshine Coast in Queensland. Julian, I know that's a market that you've taken an interest in. What particularly about the Sunshine Coast has attracted your interest?
So Sunshine Coast for us was a location that we invested heavily in 2015. Another key part of Sunshine Coast appeal and its ability to get results was the amount of infrastructure spend in that area as well. In comparison to Geelong, the infrastructure spending in Sunshine Coast is much higher. The lifestyle in the Sunshine Coast is probably one of the best in Australia. They have amazing beaches. Transport is reasonable, and so housing is affordable. The missing part for the Sunshine Coast was the ability to get a job so that you could obviously support your family. That's all changed. Infrastructure-wise, they're building a brand new CBD in the Sunshine Coast in Maroochydore. The airport is being expanded, or continually being expanded, really. And on top of that, what we've seen is people that are looking for a good quality of life. So in 2015, we invested around the Maroochydore CBD. Our clients were rewarded within that 12 to 15 months with their deposits being, with the growth being equal to their deposits being paid. Again, assuming a 20% deposit.
Okay. So, Julian, there are a few more messages coming through that your screen is frozen. Mine's moving, they can see me, but yours isn't sort of coming in when you're speaking as it should be. So I'm just not sure what's happening with the video there at your end. Not sure what you can do about that, but I'll just continue to, in the meantime, to talk about the Sunshine Coast. It's a market that not only is very close to where we are geographically, but one that we've researched a lot, and we've done quite a few reports on this market because it is, as we see it, one of the most compelling growth economies anywhere in Australia, and out of that has become a very strong property market. Julian's mentioned some of the infrastructure that's been very, very pivotal in making it so for the Sunshine Coast. The new CBD, 53 hectares, creating a CBD in the central part of the Sunshine Coast from the ground up, probably unique in the history of Australia that's happened. Cities very seldom have that opportunity. The Sunshine Coast has got 53 hectares, which is now actually starting to be built. The first buildings are now starting construction. That will be a project that extends over 10, 15, 20 years. One of many things adding up to investment totaling more than $20 billion in a regional city of about 350,000 people. Part of that has been the creation of a whole new medical precinct on the Sunshine Coast, $5 billion work in progress. The major component to the $2 billion university hospital is up and running and bringing lots of new people into the Sunshine Coast to live and work, many of them well-paid people, and that's given a substantial boost to the property market, particularly the top end of the property market on the Sunshine Coast. Is that what you've been finding, Julian, with your research in the Sunshine Coast? Are you there, Julian? Okay, you've reappeared, Julian.
Yep.
Sorry, yes, you've made a miraculous return, thank God.
Yep.
I've just been continuing to chat about the Sunshine Coast and noting that pieces of infrastructure like the new $2 billion university hospital has brought a lot of new people to the Sunshine Coast to live and work, and that many of them are well-paid people, and that's given the top end of the Sunshine Coast market, such as Noosa, a substantial boost. Is that what you've been finding with your research?
Absolutely. Noosa definitely isn't in the price range for every investor. However, what we've found, if you look at the data over time, Noosa was a bit of a volatile market, but the huge change there is how much, like we mentioned, the infrastructure spending is bringing jobs to the area. Those are high-paying jobs. So Noosa and the whole Sunshine Coast is a transforming economy, and what we're seeing from that is, even through our own client base, a lot of people are taking up jobs in the Sunshine Coast. They're moving their family up there. They're reporting that they're having a great quality of life there. Very unlikely to move back to Sydney. And all of these types of people are on good incomes, which means that they can support the purchase prices that are in Noosa. However, that Noosa is one of the most expensive locations in the Sunshine Coast, and Sunshine Beach and Sunrise Beach also quite expensive parts of the market, and they are continuing to break records with the prices that they've been achieving in those areas. So what we see from there is a trickle-down effect to the parts of the property market that our investors find affordable.
Yeah, we're certainly finding the same thing. We think the Sunshine Coast right now is the strongest market anywhere in Queensland. There are parts of the Brisbane market that are doing quite well, and there are other parts of regional Queensland that are starting to perform, like Mackay, for example. But the Sunshine Coast, for the last 1 to 2 years, and still now, we think undoubtedly the strongest market in Queensland. And it's really about what's happening with the economy and that big infrastructure spend. It's so pivotal, isn't it, Julian? When you're spending that amount on infrastructure, the real estate market can't help but rise.
Exactly right. However, I want to make a very important point that you need to really understand the Sunshine Coast market. As you move south from Maroochydore down towards Caloundra and to the northern parts of Brisbane, there is a lot of land there that will be developed over time. And investors just need to be very careful and make sure that they understand that that much supply of land will generally have a downward effect on property prices. So when it comes to investing in the Sunshine Coast, you still need to be extremely careful. Not every location is a winner. And yeah, you need to be thoroughly informed about the places that will give you that return over that as part of that webinar, like we say, over that 2-year period of time.
I think it's a very important point to make, Julian, that certainly in the first instance, you want to perhaps identify a broad location that ticks all the boxes in terms of being a place for prospective good growth in the short term and the long term. But then you need to drill down to the street level and find the absolute best location within it. It's not a case of buying anything anywhere in that location is going to give you good growth. You really need to make the effort to find the best locations, the best properties, tick all the boxes in terms of proximity to the important things like schools, public transport, shopping, etc.
100%, 100%. Definitely, when it comes to real estate supply and demand, the shorter the supply of land, the more likely we're going to get that equity uplift. So yeah, definitely places to be very careful of on the Sunshine Coast.
Yeah. One of the things to look at, and you're talking about the the prospect that a good growth area can be damaged in terms of its property market by big supply of land, oversupply of new dwellings. So it's very important to keep an eye on vacancy rates and also building approval figures. So I'm just looking at the vacancy rates charts for the Sunshine Coast, the various postcodes that cover that region in Queensland, and many of them have vacancy rates that start with a 1, in other words, below 2%, which means pretty tight rental market. The highest is 2.6%. Anything below 3% would tend to indicate a fairly healthy rental market, but many of them are around 2% or lower, which means that rental demand and pressure on rentals is going to be very positive from the viewpoint of property investors.
We've never invested in a location with a vacancy rate above 3%. The numbers that we're looking for, we just don't see the need to go to an area where the vacancy rate's above 3%. Anywhere between 3 and 2% is fantastic. Anywhere below 2%, that's an extremely hot market. There's a lot of demand for rentals in that particular market. It also is one of the key indicators to make sure you're investing in the right location.
Yeah.
So vacancy rates are a huge part of what we do. And then you're very right in what you're saying, Terry. You must also look at the building approvals, because the vacancy rates can change quite dramatically if there's a lot of land being developed and then bringing new supply to the market.
Now, tell me what you think of this, Julian. I'm often disappointed by media's obsession with like median price movements. It's pretty much the only barometer of real estate markets. And they tend to overlook what I think are very important markers of places that people should be considering. Vacancy rates is one, and then what's happening with rentals is another, because what I tend to find is that before a market starts to rise in price, we could often see action at the rental level. Vacancies come down, rents start to rise, and out of that comes demand for real estate, and prices sometimes, very often, follow rental. So it's a very good marker of a place that people should be considering, I think.
I support that. I support that comment 100%. I think what I've noticed from you, Terry, in your reporting also, is that you focus on sales volumes. So
Yep.
Sales volumes, I guess the point to make to investors is you need to understand the key markers. You can't rely on any one of those key markers. There needs to be a more thorough, in order to get your deposit back within that 2-year period, you need to be thoroughly understanding all of those key markers. And then again, without getting down to the ground level, and meeting the market face to face with the sales agents and also the property managers, you could be heading in the wrong direction. And that's what we've found, that the key part to our success is understanding all those fundamentals, checking them all out, and then still getting down on the ground level and being face to face with the market.
Okay. Look, we might switch attention to another location now, but just before I do, just to remind people who are out there watching and listening that we'd like to get your questions for the latter part of the broadcast. You can key your questions into either the Q&A panel or the chat box that you should see in front of you. You can just type in your questions, and in the last, say, 10 or 15 minutes, we'll do our best to answer as many of them as we can. So let's have a chat about another part of regional Australia. Julian, I know that you are taking an interest in Tweed Shire, right up in the north near the border with Queensland, close to the Gold Coast. Markets like Kingscliff have grabbed your attention. What's happening there that's piqued your interest?
Statistically speaking, and looking at the numbers there, it's a phenomenal set of figures. The key part of what's going on, or what I believe one of the key parts of going on in that Tweed Coast and northern New South Wales area is that, again, it's a lifestyle location. Housing is still relatively affordable in comparison to the capital cities, but the quality of life in these locations is far better than life in a capital city. What we're finding is infrastructure spending, hospitals and things like that. We're getting close to the $1 billion worth of infrastructure in those areas. Median house prices in areas like Byron Bay, which are still reasonably close, are 3 and 4 times more expensive than the areas surrounding the areas surrounding Byron Bay, and the demand by local people, homeowners, and the rest of it. That demand is what's attracting us there. Investor demand doesn't turn us on. We're not looking for that investor demand. The fact that the owner-occupier market is so strong down there, that's what's driving us to that area. And then obviously the research that we've carried out.
Yeah, I think you're right. We have also noticed an uplift in that market. You mentioned earlier that we chart sales volumes. We think it's a very good marker of future price growth. And we've noticed an uplift in sales activity throughout that Tweed Shire area. And I think some of the points you mentioned explain why that's happening. It's not only is that area very affordable compared to capital cities. I think it's Tweed, the suburbs of Tweed Shire are quite affordable compared to the Gold Coast, which is just over the invisible border. So it's a good affordability comparison with the Gold Coast. Similar lifestyle, similar attributes, perhaps less glitzy and congested, and more affordable. The other thing I think,
Terry, you hit the nail on the head there. One of the things that came up a lot when we were doing our on the ground research there is, where are these people? Why is there this population boom? Why is there so much demand in the market? And the interesting thing about Queenslanders and people that like to live by the beach is, if an area becomes too popular, for example, Burleigh Heads or the Gold Coast in that location, people that enjoy a more relaxed, less congested lifestyle by the beach are heading to these areas.
Yeah, and I think another factor for Tweed is its proximity to the Gold Coast Airport. It's again across the border that is just a line on a map, so it's kind of irrelevant. But it's in the southern part of the Gold Coast area, and it's important, I think, to be close to that for accessibility reasons. But also, there's quite a precinct that's being built up around the airport, as often the case. It becomes a major employment. I think even university campus is there now. So the proximity to this airport, which is now an international airport, is an important factor for the Tweed market as well.
Oh, absolutely. And taking that a step further, what we're finding is some of the top end of the market, the purchasers within those top ends of the markets, they may still have requirements in the capital cities. What I mean by that is, they may be a partner in a law firm or accounting firm, or they may be running a business. And having that proximity to the airport, either Coolangatta or Ballina Airport, which is Australia's busiest Ballina Airport being Australia's busiest regional airport, this allows people within travel time, flight time, etc. They can be in one of the capital cities in an hour and a half or 2 hours on the east coast. So although it may not look like it's connected and close by, it's very easy to get around.
Yeah. Now, we've talked a lot about the importance of infrastructure, and that's another thing that's happening in this area. In particular, there's the prospect of a major new hospital, a project that's costing over $500 million. It's been actually quite controversial in terms of the location of it, but nevertheless, important piece of infrastructure that's coming to that market. It's going to create a whole new major amenity for the Tweed area, but also it's going to generate economic activity and jobs and bring new people in to work on the construction and then to work on the completed project. So that's important as well for the Tweed area. Absolutely.
And so, if somebody has a job within the public service, may that be the health or education, the income is quite reasonable. If two parents are working, as a nurse or a teacher along those lines, they still have the ability to live a really good quality life with an affordable house in that area. And so once people cotton on to how good the quality of life is in these areas, that's where we start to see the demand building up.
Yeah. Now, one of the particular locations that I know you're interested in there is Kingscliff, and it's one that we've noted the median price for Kingscliff for houses in the last 12 months has grown almost 20%, and so now it's $1 million suburb. It's got a median house price above $1 million, but it's also a very, very strong apartment market, much more affordable, median price around $530,000, also showing good growth. So anything in particular about Kingscliff that's attracting your attention, Julian?
Well, just off the back of those figures, Terry, that's a huge part of why we like the area. There is opportunity to buy below that median house price. There's not a huge amount of opportunity to buy below that median house price, but we believe we've got our hands on some quality properties in that location. And we're expecting for ourselves and for our clients, for our ability to buy at below that median house price and just follow that median house price as it continues to grow over time.
Yeah. Well, that's a great example of one of the points that we're at pains to make, and I know you would agree with this, that media are so obsessed with Sydney and Melbourne, and they extrapolate that across the whole country, and they're talking about Australian property prices have been falling. They haven't been falling in this area. They've been getting remarkable growth. Kingscliff's median price up 20%, Casuarina, which is very close to Kingscliff, up 21%. Then you've got Tweed Head South up 14%, and there's other locations in Tweedshire that have had double-digit growth in their median prices. This kind of growth is happening. People just know about these markets, but they're certainly not finding out about them from tapping into mainstream media, which continues to talk excessively about the two biggest cities.
Yeah, exactly. And I think that's the difference between an informed and educated investor versus somebody that wants to buy an investment property in a location. The type of work that we do by following these research methodologies, we're changing people's lives. So we're using numbers like 14%, 20%, 30%, for example. But when you actually overlay that figure on a purchase price from 500 to say 700,000, those types of figures really make a huge impact on somebody's life. And so therefore, it's super important for investors to move away from the mainstream media. They could possibly be being fed fake news these days, Terry.
I think that's a very strong possibility, particularly with the coverage of real estate in our major newspapers and other forms of media like ABC, radio and television. Not particularly informed coverage at all. Quite often it's just a press release regurgitation, recycling of press releases, which is a piece of propaganda from people with a vested interest in the method and the message that's contained in the press release. So I think investors need to do a little bit more. They need to dig a little deeper and be able and willing to access good research information and good advice from and get the assistance of companies like your own, Julian.
Absolutely. We're driven by results, so we're very there's no greater feeling both personally and professionally than having a client's portfolio grow, whether that be their first or subsequent properties, having them winning and having them continuously making money. It's a great feeling. It's a great business to be in if you can continue to deliver those results. Okay,
now just we've been going about 40 minutes. The time we have available, which we want to leave some time to answer people's questions. So I'll just remind people that you can type your questions into the Q&A panel, the chat box, and we'll do our best to answer as many as we can. But just to switch attention one more time, Julian, we've talked about an important regional city in Queensland. We've talked about a growth area in New South Wales. So let's focus on regional Victoria. I know you're particularly interested in that market, as are we. We've found it to be one of the very strongest market jurisdictions anywhere in Australia over the last couple of years and continues to be strong. And one of those markets that has been a very good performer is the city of Ballarat, not far from the city of Melbourne, very well connected to Melbourne, a strong diverse growth city in its own right. So tell us a little bit about your interest in that particular location, Julian.
Oh, Ballarat presents an excellent opportunity based on the infrastructure that's being spent in there. But the entry price to Ballarat is one that a lot of people can afford. So not everybody can afford the Kingscliff market, for example. We spoke about Noosa. Again, those types of markets aren't for everybody. However, Ballarat at its entry level point, which we believe the buying should be sub 500 in Ballarat, it presents such a great opportunity for people in that price range. And as Geelong's now progressing further and further through its cycle, people can still make good gains sub 500 in Ballarat.
I'm just looking at a chart of suburbs in Ballarat. A lot of suburbs have median prices for houses in the 300,000. There's some in the low to mid 400,000, but the most popular suburb in terms of the number of sales in the last 12 months is Sebastopol, 270 house sales in the last 12 months, median price 285,000. So still very affordable, despite the fact that the median price has grown 10% in the last 12 months. And that's the big standout from this list, Julian, is that virtually every suburb in Ballarat has had double-digit growth in its median price in the last 12 months. And we know that that's been going on for the last couple of years and it's still happening.
Yeah. Again, numbers, research, data is extremely important. Without getting down to the ground level, spending the time being face-to-face with the market, there's more to it than the data is definitely promising. And however, what we find is the data is the very first stage of the process. We spend a lot of time in the office looking at these figures before we actually get down to the ground level. And once we get down to the ground level, we can then determine, okay, is this a sugar hit or is this the beginning of a consistent growth? And so Ballarat was somewhere that we did spend time being face to face with the market and absolutely supporting what you said there, Terry. Great gains at a great entry level price. And that's what attracts us to the area. And its proximity to Melbourne, obviously.
Yeah, I think one of the things that's helping to drive that market and others that are, say, within an hour or so of metropolitan Melbourne is actually buyers out of Melbourne, both home buyers and investors. Melbourne had sort of 4 years of strong growth and has become an expensive market. People are looking for more affordable alternatives and they're finding it in regional cities like Ballarat, also perhaps a different lifestyle. In some cases, people might choose to buy and live in Ballarat and actually commute back to Melbourne work because it is within commuting distance, great train links and good road links as well. Absolutely.
And that definitely, all of those things add to the appeal of Ballarat. Some of the things that we noticed during our research is if you're sort of 30 minutes out of Melbourne, and it doesn't really matter which way outside of Melbourne that you go, 30 or 45 minutes out of Melbourne, those areas are congested, the block sizes are small. By comparison, the purchase prices are probably anywhere from $150,000 to $200,000 more. But what we found was we were quite surprised of the negative quality of life in those locations. So, Geelong, Ballarat, those locations just past those 45-minute places or 35-minute places out of Melbourne, they bring so much. Ballarat is a beautiful city. The architecture in town is very very appealing. It's easy on the eye, and we just couldn't see how the quality of life on the outskirts of Melbourne in these huge estates where there seems to be no end in sight for their ability to continue to bring paddocks of land to the market. It just seemed to be a no-brainer to go for Ballarat versus the outskirts of Melbourne.
Yeah. I mean, it does tick so many boxes. You mentioned the architecture, and it's a historic city, you know, going back perhaps to the gold rush days. So it's got a lot of big, grand, old historic buildings. So it's got that lovely fabric to it, as well as all the modern amenities, great infrastructure. So a population of over 100,000, projected to keep growing. It's got lots of different elements to its economy. There's lots being spent on infrastructure. We keep hammering that point, but Ballarat's got, for example, $460 million being spent on a hospital upgrade. There are a couple of very major wind farm projects, a couple of $1 billion projects, in fact, just outside of Ballarat. That's going to bring economic activity. You could talk about just about Ballarat for a couple of hours because it's got so many qualities. And then you've got the affordability factor and the better rental yields compared to Melbourne just down the road.
Yeah, yeah, exactly right, Terry. Yeah, again, infrastructure, a really key point, and I think that's coming through with a lot of the discussions that we've had in this webinar, is the infrastructure. The other thing is what we've found, and I'm not trying to get political one way or the other, is the Victorian government has really done a great job in making these regional cities more accessible to Melbourne. So, for example, you know, train lines are being more direct from Ballarat into Melbourne City. Geelong from Port Arlington, for example, there's additional ferries that will commute workers within an hour and 30 minutes from Port Arlington, for example, all the way into the city. And it's the same into Docklands, and it's the same with Ballarat. You can jump on a train and still be in Melbourne kind of in that 1 to 1.5 hours. So a lot of people closer to Melbourne, their commute would be equally as long, and the real estate would not be comparable. It'd be so much more expensive, therefore more mortgage stress and things like that. So we see a huge amount of upside for the lifestyle and the demand for property in Ballarat.
Actually, it's a good point well made. The state government actually spent $5 billion on what they called the regional rail link, and the idea there was the trains coming in from locations like Geelong, Ballarat, and also Bendigo, which also is a place with lots of qualities as well, ended up being stuck behind suburban trains. So they built a dedicated train line, that what they called the regional rail link, $5 billion project that was completed a couple of years ago and up and running. So people coming in from places like Ballarat can get there much faster and in greater comfort. So that's been a big factor. I think the other thing that's worth mentioning about Victoria generally, the reason why these markets are doing so well is Victoria is ranked the #1 state economically in the country. It's also the #1 state by some margin for population growth. It just keeps topping the charts, whichever kind of economic indicator you care to mention, but particularly the performance of the economy. Spending on infrastructure is a big part of it, and population growth.
Look, Melbourne, besides the weather, Melbourne has a lot to offer. I mean, I'm a little bit more partial to warmer weather, and you know, I've moved north from Canberra. I would, you know, eventually I may be on the Sunshine Coast, further north where it's warmer. However, yeah, look, Melbourne's definitely in a position to grow. If you consider how flat Melbourne is in comparison to, for example, Sydney, there's a lot of land that's readily, easily and readily being able to be brought to the market. So when it comes to investing and real estate, you need to break down those figures. Sure, Melbourne will be big. Sure, that will have some powerful economic impacts for jobs and real estate, but you also have to be very aware that there is paddock upon paddock upon paddock, flat paddocks surrounding the Melbourne metro area. So you have to do your homework and make sure you're not going to end up in an area where the supply will continue on for 20 or 30 years, therefore putting downward pressure on your property price.
Yeah. And we actually saw that, Julian, in the Wyndham Vale area, which is heading down in the southwest, out of central Melbourne, suburbs like Werribee and Wyndham Vale, Point Cook, newer suburbs like Tarneit. It went for a phase of major oversupply, perhaps half a dozen years ago, which dragged down property values. It's since absorbed all of that. It's been a growth market. But those sorts of things, as you point out, there's just so much land available for new suburbs, whole new suburbs, in fact, in those areas. And you're just got to be very, very mindful of the level of supply and the level of vacancy rates.
Yeah, and look, you make a good point that those property markets have changed over time. As a company and personally as an investor, active investor, I like my assets to be bought at the right time of the cycle, because the whole concept of an asset is it's there to support you and it's there to grow. So buying in these areas, sure, you can hang in there and wait for those markets to turn around. For me personally, they present far too much risk. I'd much rather follow the data and be contrarian as in terms of capital city locations, to make sure my assets are going to be able to support me when I need them, not having to wait for them to do their job in 3 or 4 years' time.
Okay. Well, James, we've got about 5 minutes to go before the hour is up. Perhaps we could... someone's reacting to your comment about the Melbourne weather. Fair enough, I was down there last week and it was pretty damn cold, let me tell you, but a great place to be nevertheless. Perhaps we could focus on some of the questions that are coming in. Timothy's asking about a reference you made when we're talking about the Sunshine Coast, Julian, that you invested heavily in that area in 2015, and just asking perhaps you could expand on what you mean by that, who was actually investing there at that time.
Okay, so Timothy can hear us, right?
Right.
Yeah. Okay. So Timothy, what that means is we, as a location at that point in time, we focused all of our attention on making sure our investors got good deals in those locations. So in 2015-14, anywhere close to Maroochydore, we believe that was the place that we were going to get our clients' deposits back within that 2 years. Sometimes they were even faster. Whereas now we have our approach and our locations, as you heard in the webinar, are there's more variety there, because we really nailed that early growth for our investors, and so now you need to work a little bit harder for that same type of growth. So I'm not sure, but I hope that answers your question.
Yeah. So essentially, you pinpointed the Sunshine Coast a couple of years ago, rather well timed, I would have to say, ahead of the growth that's happened since then. But you pinpointed as a location that you were recommending to your investor clients, and you helped them to buy on the Sunshine Coast as a result of that a couple of years ago.
Yeah, so at that point in time, there were other companies promoting areas in that location. The location that the majority of our clients purchased in, there was extremely limited land supply. It basically shared a border where the new CBD was being purchased. So for us, it provided everything. It ticked a lot of boxes. It was unique. The type of housing was unique. It was high quality. So yeah, but other people that have purchased in Sunshine Coast at that same time frame, if they were in the wrong locations where there was too much land supply, they probably didn't get the results that we got in that time frame.
Julian, Avi's asking about Woombye, which is on the Sunshine Coast, and what we think about.
Woombye versus Moreton Bay region.
Yes.
Sorry, Terry, you go.
No. If you've got some thoughts on that particular question, go for your life. Yeah,
look, Moreton Bay for me, I'm assuming you're meaning north of Brisbane when you're talking about the Moreton Bay region. Yeah. Look, you have to be very careful. There's some corridors of land in between South Sunshine Coast and North Brisbane. And if you're in a location where there is a lot of land supply, you need to be very careful about what you buy and where you buy. Woombye is where would I buy if I had a choice between Moreton Bay and Woombye? I would probably buy in Woombye. But then again, if you're going to invest in the Sunshine Coast, I believe there's better places within the Sunshine Coast to purchase rather than Woombye. At this stage, Avi, I have no idea what your budget is. I'm just telling you as much as I can from the information you've given me.
Yeah, I tend to agree with that, Julian. I think Woombye is kind of more of a sort of an acreage lifestyle kind of a place, and I think you'd be directing your clients more down to central Sunshine Coast where the infrastructure is closer to the beaches, closer to all the sort of the basic infrastructure, shopping, etc., that the Sunshine Coast has to offer.
Yeah, exactly.
So Gail is asking, you mentioned use the term sugar hit. You're trying to avoid those locations where sometimes there's growth, and you've got to ask the question: is it just a sugar hit, or is it real and long term? And she's asking, would you have some examples of places that are more sugar hit type places rather than the places that have the stronger fundamentals?
Yeah, look, at a high level, Gail, a sugar hit location would be what we saw within the mining industry.
Yeah.
There was really only one economic driver to the growth in that location. It relied heavily on one part of the economy, and so therefore it presents more risks. The areas that Terry and I are talking about are diverse economies. They have both public and government infrastructure spending. They have appeal for quality of lifestyle. So if you compare those to mining areas, some of those mining areas were definitely boomed and they went. But outside of the mining boom, it's highly unlikely anybody would go to live there for the lifestyle. And without any jobs, then obviously that was the recipe for disaster to see places go down. So there are a couple of areas out there that are considered sugar hits. We're happy to take that conversation offline if you like.
Yeah, and right now, unfortunately, Julian, we're starting to see headlines in major newspapers suggesting some of the mining towns are going to boom because the approvals for the Adani coal project in Queensland, and I'm very much at pains to warn people that I don't think that that's very wise investment for all the reasons you've just articulated. Gail was also asking about Queanbeyan. Now, Queanbeyan's just outside of Canberra. It's an area that we have focused a little bit on as well. Do you have that on your radar screen, Julian?
Yeah, I'm a Canberra boy, born and raised in Canberra. So I understand the Queanbeyan market. It does, once again, it's affordable. The thing about parts of Queanbeyan is the entry-level prices are a lot lower than the surrounding Canberra suburbs. So, so as prices become more expensive in Canberra, people are looking for alternatives, and Queanbeyan really can absorb that part of the market. So yeah. However, in saying that, we're not heavily focusing on that region at the moment. That's not an area that's on our radar. But I'm sure Terry can add a lot because I know Terry's been researching that area for a while.
Yeah, similar to what you've said, Julian. It's proximity to Canberra, but more affordable than Canberra, and also because it's over the invisible border in New South Wales, first home buyers have been able to drive over that invisible border, effectively be buying. You're only 15 minutes from the centre of Canberra. I actually drove it earlier this year just to convince myself it was that close. So you're 15 minutes from the centre of Canberra. You're actually in New South Wales. You can access first home buyer benefits that are available in New South Wales and buy more affordably than you can in many of the suburbs of Canberra, but being closer to the centre of Canberra than many of the suburbs of the ACT. Another question.
Huge price range, huge price difference for that 15 minutes, massive price difference.
Yeah, so it's definitely worth considering. Nish is asking, what are your thoughts on Western Newcastle market? So Newcastle is probably worth a bit of a comment, Julian, but Nish is particularly asking about Western Newcastle markets like Thornton.
Yes, so look, Thornton is not an area I've been closely looking at, but what I would say is a lot of companies that don't put a lot of effort and time into actual research that's going to result in getting your deposit back in that 2 years or less. There's a lot of building going on in Thornton. There seems to be a lot of land there. Can you make money there over time? Absolutely. However, it could be a case where you buy now and you may have to wait several years until you're able to get your deposit back. They're probably, in my experience with areas like that, you're probably not going to get valuation support from the banks. They seem to not like areas like Thornton off the back of supply issues and things like that.
Okay. All right. Look, Julian, we've clicked over the hour, about an hour and 5 minutes. In fact, we've been going, and I think we've covered a lot of useful territory for people who are watching, listening. So thank you, everyone who has participated today. I know that many people are registered for the event and will watch a recording later. Everyone who's registered for this webinar will receive a copy via email and can watch it again or for the first time at your leisure. We just want to put up a slide, Katie, if you can make that happen, to show people how they can make contact with Julian and his business if they'd like to follow up and ask further questions, or perhaps talk to Julian and his team about how they can assist them as property investors to invest in the right places. Katie, it was there, and then it's got here, it's back there. So Julian, perhaps you could just speak to that for a few moments before we wrap up.
Yeah, so this is us. This is our company. We're focused on results. Okay, we're not an undercover property marketing agency with close ties to developers that are just pushing product that can't be sold in the local region. You know, I think if I can, whilst I have this time here, just point out, you know, there's a lot of companies that look and sound similar, but if the company has a huge amount of property to present to you or sell to you, I'd be concerned about that. We're very specific about where we invest. There's always demand in the locations that we invest, so our investors need to move quickly, and we have a very strong history of great results. So get in touch with us, and we'll be more than happy to share those results with you. And obviously, being mutual clients of Terry's, we're not precious with the time. So please, any question that you have, we'll be more than happy to help you.
Okay. Well, thanks for that, Julian, and thanks for your participation today. I think it's been a great broadcast. I think we've touched on not only some great areas that I think are really useful for people to consider: the Sunshine Coast in Queensland, the Tweed Shire area in New South Wales, and in regional Victoria. Firstly, Geelong is a great example of recent growth, and Ballarat is a great example of current growth markets. But we've also touched on some very useful issues: the importance of infrastructure, the importance of investing in places that have diverse economies and growth factors, the importance of being aware of supply issues. Some areas have lots of land available for new development, and that can suppress property growth. So we've not only touched on great locations, but also very important issues for people to be aware of.
If I can just add, sorry to cut you off, Terry, can I just add two things? We don't give away all of our secrets, so we do still have some areas that we haven't spoken about today that are equally as impressive. The second thing is, we are a major sponsor of the West Tigers football team. They are playing Cronulla this Sunday, and if they win, it will be the first time in 9 years that they reach the semi-finals or the finals. So If you can, get out there, support the West Tigers. It's going to be a great game. Sorry, Terry, I had to take it away from business there, but it's big news here in Sydney.
Yes, there is life beyond real estate, Julian.
That's right.
And the fourth Ashes test starts tonight. I'm going to be tuning into that as well. Okay, thanks a lot, Julian. I think it's been great. Really interesting to talk to you in this format. It's great to have this sort of conversation. I think it's useful for people out there watching and listening to hear what you think and what I think, and to toss these issues around and talk about locations. If you want to follow up and find out more of what PRPTY360 and Julian Fedini and his team can offer, the contact details are on the screen. Please take advantage of that opportunity. So thanks for participating, and let's do it again soon. Bye for now.
Perfect. Thanks, Terry. Thanks, Terry. Cheers. Bye.
Okay. See you, Julian.